welcome to Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a bit of a consolidatory kind of day for the market. So the Nifty is just about hovering at around 10,900, up around 15 odd points. There is a marginal outperformance which is seeping through from the mid-caps as well as the bank Nifty, but it's off the day's high. So let's see whether that kind of momentum sustains through the trading session. Lot of stocks in focus to discuss over the next 1 hour, and top of mind is Jet. So that stock is seeing profit booking. We have Z Entertainment, which is reacting to numbers and the ad revenue growth this time round. KPIT, which is reacting to numbers as well. And Specialty Restaurants, which is zoomed ahead on its numbers up in upper circuit today. And other stocks include something like a Graphite and HEG from that space, which are buzzing around. So a lot to discuss over the next 1 hour. As of now, the Nifty is just about holding 10,900. Hi, Prashant.
It's a high, off the day's high. And I think, compared to what the rest of Asian equities are doing, what we have on the screens here is actually much better with still some green left. Otherwise, I mean, you look at Asia, majority of the indices are actually in the red, led by the Nikkei, which is down about 0.7% or so. So there seems to be a bit of a turn in sentiment, but there is no clear trigger as to what is driving this. The first indication, for the first cue in that sense for other markets in the region was Nikkei itself. I mean, a market turning lower, and the big one, which is the Japanese market, which started selling off. I mean, I think at the low point, the Nikkei was down almost 1%. It's pulled back a little bit, but there's no real clear trigger. There are some tidbits here and there. I mean, for example, the no confidence vote in the UK. But that is only going to be later. I mean, we'll only find out, and even European markets are only going to figure out and react to that vote tomorrow. Because, I mean, it is much later, post-European session is when the vote is scheduled for. But is that really a trigger for markets to be, down and out? I don't think so. I mean, they should have been down and out yesterday as well, because yesterday was the meaningful vote. There was one little comment coming in from the US trade representative overnight that last week's China-US talks actually were, there was very little progress which was made. But that is, again, kind of looking for reasons. This morning, there is some data which isn't all that well. So we got data from the confidence data from Australia, where the number has actually slipped below 100 for the first time in the last 5 or 6 months. And I think we got data from Japan, which is the core machinery order, which has slipped to no growth, 0% growth compared to 3%, which was expected. So, I mean, few things here and there. But there is no real clear driver for this turn lower as far as sentiment is concerned. Sometimes, I mean, prices themselves send off a cue to markets around the region. And I suspect more than anything else right now, that is what is happening, notwithstanding data at the margin, which seems to be coming a little weaker. But we've got Sudarshan Ekta joining in.
Yes, now. Absolutely. And before that, we have some important statements coming in from the Aviation Secretary with regards to Jet, as well as the open offer exemption. According to the Aviation Secretary, that is something that Jet, Etihad and SEBI need to discuss. We will get Lata in to talk a little more about her exclusive story with regards to Jet. Currently, that stock is down around 5.5%. Sudarshan Sukhani joins in to discuss the technicals of the market. Then, Sudarshan, hi, over to you. What is your recommendation? One on the index and two on specific stocks.
Well, on the index, we have been saying go long and stay long for the last 7 days. And slowly and steadily, the market is rewarding this view. Now, this is an inching upward market, which means that it's not going to happen in a day. But I do think that a target of 11,100 or even 11,200 is possible and likely. So the trade still is be long in the Nifty, be long in the Nifty Bank. If you are not yet long after so many days, then go long now. It's not a trade for intraday. Today we are going to see choppy markets, but carry this through into next week. That's the view on the index, mildly bullish and being long. Independently, stocks also are offering the same kind of opportunities. Today, of course, the stocks in the large cap segment are likely to be a little laid back because they had a good day yesterday. But still, ICICI Bank is a buying opportunity. Banks are outperforming and ICICI Bank is outperforming in that lot. So consider buying ICICI Bank. The other two are mid-cap buying ideas. Stay on the buy side. The first is Colgate. Colgate is now coming out of a small consolidation, hoping to see higher levels. And the third is NIT Tech. IT is doing well, and I think NIT Tech should outperform.
Okay, thanks very much, Sudarshan, for that. We'll touch base a little later for more. Let's get straight down to stocks then. Z is amongst the top Nifty gainers on the back of very good performance. Core performance was good. Mangalam is standing by with more details on this one. The stock was up 2% going into the numbers. It's actually come off the highs today. Mangalam.
Absolutely, and that is exactly why it's come off the highs in today's trading session. The fact that it was higher in yesterday's session. However, remember, Z as a stock has been underperforming earlier on account of various headwinds on the stock. Brokerage downgrades came by, as well as the impending promoter stake sale. However, as far as the numbers are concerned, no complaints about that, because all the numbers were above what the street was expecting. Right from the revenue, 2,167 odd crores on the top line, above a CNBC TV18 poll of roughly around 2,100 crores. And that revenue growth was led by both ad revenue and domestic subscription. So domestic ad revenue came in higher by 20.6%. We were working with a range of 16 to 18%. And domestic subscription, which is a smaller contributor to the overall pie in terms of revenue, came in high by 28%. And the outperformance was led by the fact that the street was expecting only 15 to 17% growth in domestic subscription business. EBITDA margins on the back of that expanded nearly 750 plus crores in terms of the company's operating profit, and the net profit on the back of that beating street estimates. Brokerages are fairly positive on the stock. Today we got notes coming in from CLSA. They believe that it is attractive at current valuations. At the same time, they've increased their target price. We have some commentary coming in from Citi as well as HSBC too. However, the important part, management in the conference call as well as to our interview today this morning said that the promoter stake sale plan is pretty much on target. So let's hear out what the management had to say.
Okay, well, Mangalam, we don't have that particular bite right now, but we'll get to Z Entertainment and the management. We have some news coming in from M&M as well, where they're going to increase their stake in SsangYong, and that's going to be via subscribing to 1.18 crore equity shares worth around 300 odd crores. So that's important news coming in. But we have KPIT Technology, which is in fact reacting to what is a disappointing Q3. Rima joins in to fill us in.
Well, it's a top-down miss for KPIT Technologies. So first, on the revenues, the company's reported a constant currency decline, negative revenue of 1.7% versus estimates of a growth of 1.5%. In dollar terms, the revenues come down by 2.3%. Again, estimates were for a 1% growth. And, you know, KPIT Technology has two key businesses which eventually will get demerged. But you've got an IT business and you've got a product engineering business. Now, the IT business was had a fairly weak quarter, and the key reason was lower billing days and completion of a couple of large projects in IT. The engineering business had fairly good momentum with a growth of about 5% quarter on quarter. That said, despite the miss in Q3, the company continues to hold on to its FY19 guidance. So year on year, the company expects a growth of 8 to 10% for FY19. And even on the margin front, the company expects the margins will exceed their earlier guidance of 11.5 to 12.5%. Also, they've got the NCLT approval for the merger of Birlasoft with KPIT Technology. Once that merger is through, then the engineering business from the merged entity will be carved out and listed separately. So right now, the KPIT IT business will be renamed as Birlasoft, which will be trading on the exchanges on the 24th of January. And KPIT Technology will house the product engineering business, which should get listed on the exchanges in March of 2019. So it's a fairly weak quarter for KPIT Technology. When we got chatting with the management, they indicated that the outlook for engineering continues to remain quite good. They expect about a 20 to 25% growth in the engineering business going ahead.
Rima, thanks very much. Good to get that detail. That is KPIT in focus, stock down about 4.5%. Well, you know, I just want to point out that the Nifty, by the way, is now in the red, 10,886. And we're down 1 point, but it's quite a bit of a drop from the highs of the day.